Good morning, everybody. It's Friday, May 14th. It's about 8:20 in the morning. Just want to run over the gold and S&P charts. We've got a couple things going in our favor, and things are looking pretty promising for a weak Friday for the S&P 500. I'm just going to run through those charts and just show you my thoughts here. Okay, so here we have the gold overlay chart using Kitco. You can see we had a lot of price action going through the same area. This morning we saw gold rally up. It broke the high of yesterday, or 2 days ago actually. It's pulled back, it's consolidating. Unfortunately, we didn't get a big enough pullback that I really wanted to jump in. I do think gold is kind of getting near a top here, and as much as everybody wants to jump in who's not in, it's again, I just don't chase. I'll show you on the charts why. But yeah, gold is making this little bull flag. It could push up a little higher today and form a head on the 60-minute chart, and we might actually see a better pullback probably next week if with any luck. Okay, so let me just jump to those charts. Here we have the daily gold chart. Right now, just to kind of recap over a couple things here. These cycles on the bottom seem to be working very well for gold. We had the long-term blue cycle moving up here. Once it started to top out, we had this head and shoulders play, and we actually caught about $34 on the downside. We caught some down here, and we actually caught a little drop here. And then the Euro news came out, and gold has just rocketed. But what I think is we're just at the top here for the blue cycle. So I think we're going to top out. We might get a push higher here, and what we'd have is this would be a shoulder. We might get a little head, and we might get some type of shoulder action, and then a possible breakdown. And what I'm looking for is a test down to this level, and we'll have to see what if it pulls back here. There's not much we can do right now. Gold is pretty much going parabolic. It's starting to curve, and it's going pretty much straight up. And of course, a straight up move isn't sustainable. Eventually, when it does turn change direction, it'll usually drop like a rock, give back pretty much all the gains, which is what we saw here in November, December. We saw gold just rocket higher. Of course, can go a long ways this way, and it's frustrating if you're not in because it can just keep pushing and pushing and pushing. But the good thing to know about parabolic moves is they'll give back pretty much most of the gains when they do roll over. So we could see this move. It could potentially come back down to 1180 or something like that, or might come all the way down to test the 1200 or 1230 range. We're just really going to have to play it by ear. Not much we can do right now for that other than just watch it and hopefully maybe get in or possibly short if we get an overbought condition in gold and an intraday reversal pattern. So that's what I'm looking at there. I did have a question from a subscriber wondering why the S&P isn't called a parabolic move because it's run up continuously for 2 months, and why gold is only moved up for a few weeks and I'm calling it parabolic. Everybody's got their own opinions of what parabolic is. To me, anything that is straight up, like this candle right here, like any candle that moves pretty much straight up or straight down, I call it parabolic just because it's just one straight sharp move and it's not sustainable. It's going to end up reversing. So the way I see gold is it's pretty much going almost straight up here. It's not sustainable. Eventually, once it cracks a support level and breaks some trend lines, everybody's going to start hitting the sell button, and it's going to cause this great big sharp drop. So to me, parabolic is something that's going up so fast that it's not sustainable, and there's a lot of people just jumping on the bandwagon and they're putting their stops in and have trailing stops. So once it starts to break down, it just starts triggering everybody's stop, and you get a very sharp correction. The S&P, on the other hand, is let me just pull that up. The S&P, on the other hand, completely different. Yes, it's rallied very strong, but it's very sustainable. Like, it's a nice slow rally. It can digest it. It moves up a bit, digests. It moves up, It moves sideways, it moves up, it digests for a while, it moves up, digests, moves up. So it's not parabolic by any means in my opinion, because it can just keep moving up and moving sideways to digest the move. Whereas gold is the opposite. We're seeing it hook up like this, and eventually it's going to start triggering stops that everybody puts in, and it's just going to cause a sharp drop back down. So and also for this S&P drop, it was pretty much a parabolic drop. It just went straight down, and what goes straight down or straight up usually comes straight back in the opposite direction. And of course it did. It came right back to where the original breakout level was. So that's kind of my thoughts on parabolic moves and the S&P. Anyways, let me just zoom in here on the hourly gold chart. What I'm looking for gold, which we didn't quite get yet, we had gold breakout and it started to run. And what I'm looking for is a pullback to a level here, and this is what I'm looking for gold to kind of pull back to. And of course it didn't pull nearly back that far. It pretty much came down to the 2009 breakout level, which goes way back, and now it's bounced off it. But if we zoom in here, it's possible that we are going to form, the market is overbought here. It's possible we're going to form a shoulder. It's going to come up higher, form a head, and then we might form a shoulder. And depending how the angle of that shoulder is and what the volume does, if the volume on that shoulder just thins right out and eventually goes down to nothing while the prices go up, then we're probably going to be looking for a possible short up here through resistance, through some chop that'll be up here. We'll want to short it and catch the breakdown through the neckline, and it should bring us down to a pretty good support level, which is around the 1220 area, which I think will act as a good support level. If not, we might go a little deeper. So that's what I'm looking for gold. Pretty much we're just going to watch and see what it does here. I have a feeling if the markets sell down, there's going to be more money moving into gold today, so we might see it push up a little higher and like I said, form a head. But I think it's getting tired and ready for a move down. So as for the S&P 500, we went short yesterday morning. Market ran up. We saw prices hit a resistance level, and now we're playing the downside. Cycles are down. Volume was going down while prices was going up. Very bearish. And of course we hit into a resistance and we took a short position, and now it's slowly moving in our favor here. So that's what's happening with the S&P. If I zoom into the hourly chart, we had the nice sell-off into the close yesterday. The market just tanked. Big volume. A couple big spikes of volume actually. Kind of get ready spikes. You see the market get overbought. It's into resistance. You see the choppy action coming. We see a couple of these high volume spikes, meaning that sellers are now moving in, and then we saw the collapse, and we had this little bear flag and drift up through the night on no volume, and now it's rolled over, it's cracked, and it's heading lower. So I'm hoping the panic's going to set in for Friday. There's so much news coming out. Nobody wants to hold positions into the weekend. And yesterday we saw panic selling into the close. I have a feeling we're going to see that panic selling carry over today as everybody kind of gets out and they don't want to hold over the weekend, because for all we know another country is going to need a bailout or something. So we'll have to see what happens. Hopefully the prices drop. And we'll just go from there. Anyways, talk to you guys later. Bye-bye.